No, it's not because the market's pricing in this strong economic backdrop. I know there are risks around COVID and supply chain issues right now, but look out to 2022, another year of booming global economic growth. This isn't like 2009 to 2019, where global growth was below average, and anytime central banks withdrew stimulus, there were concerns about what that meant in terms of a real slowdown in earnings or economic growth. But this time is very different. We're in a booming economic environment. And generally, when we've seen rates rise from low levels or even tapering begin in this type of an environment, it's been greeted with positive returns by the stock market. I just point you back to the European Central Bank. When they tapered back in 2013 or again in 2018, stocks went up because during those periods, economic growth was accelerating, and that's what markets are pricing in again this time.
Yeah, Daryl, I mean, the S&P right now is up 1.1%. 44 or 46 is the level there. We're now back in the green week to date. The pullback we've seen in recent days and in recent weeks for the major averages, is it done?
We think it's probably done. You're about ready to turn the calendar, Morgan, into the fourth quarter next week. The fourth quarter seasonally is the strongest quarter of the year. On average, you go back 30, 40 years, the S&P does about 4.5%, 5% in the fourth quarter of total returns. In years specifically where you have limited drawdowns like this year, so the lowest drawdown we've seen was the February-March one that was basically 4.2%. Now you've got 4%, let's call it this week, peak to trough. Similar years like 95 and 2017 have been really strong fourth quarters and really strong years for the market overall. So we think the fundamentals set up well for a nice fourth quarter so far.
Jeffrey, we started the week with fears rippling about Evergrande and the situation that's playing out in China in real time right now. How big is that risk, given some of the conflicting headlines we're now getting around payments and possible defaults where that institution is concerned, and, of course, all the exposure to other companies, including some U.S. banks? How real is that risk right now as it stands for markets here?
Well, there's a real risk of default and a real risk of breaking up Evergrande, but that's not necessarily a problem for the rest of the market. The debt is fairly well contained, as you talked about on this show. The reality is that China's targeting the sector for reform. Rapid regulatory changes that shake China's stock market are not uncommon, and they're often followed by very sharp rebounds following broad policy moves. China's monetary policy is actually pretty tight right now. I'd expect to see over the next couple of weeks, heading into the Golden Week holiday starting October 1st, more easing announcements and more support for other industries. The typical peak to trough drawdown in any year in China is 28%. There's a bear market every year in China, but it's usually followed by a very sharp snapback on easing policy moves. So you want to be careful here with China. The markets can move very quickly, both down and back to the upside.
Daryl, I'm not trying to look for trouble here, but claims up for the second week. The chair did say that he'd like to see a good jobs print in order to make that November announcement happen. Not specifically, but sort of led the market to believe that way. Does that make you think the next NFP print at risk?
Actually, it's a good point, Carl, and you do have to watch those high-frequency data. I don't think so. I think the next NFT print is actually really good, basically. I think the job market's picking back up. We had the COVID issues, right? But there's good evidence, if you look closely at the data, that the Delta variant numbers are peaking here through August and call it early to mid-September. Again, they're still more elevated than we want them to be. But if you can get that to happen, there's no question the demand is out there. There's no question the labor market is healthy right now. So we think you're going to see strong job gains into the fourth quarter. Of course, you've got the holiday season as well, which companies are scrambling to both stock the shelves and hire enough people to support the demand that's going to come in the fourth quarter this year.